Every trader reaches a pivotal, defining moment, a silent crisis that unfolds not in the market's tumult, but in the quiet of their own workspace. They sit immobilized before the luminous screen, a mosaic of candlesticks and indicators painting a story of perpetual motion, and yet, their own account balance tells a tale of stasis. After months, or even years, of fervent study, of backtesting systems into the early hours, of consuming every piece of wisdom from self-proclaimed trading gurus, the ledger remains stubbornly unchanged. It whispers a consistent, demoralizing narrative of inconsistency, frustration, and profound stagnation. The mind, in search of an external culprit, begins to weave narratives of a personal curse, a rigged system, or a fundamental, innate lack of the elusive trader's gene. Before we continue, make this commitment. This channel isn't about quick fixes, it's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates, and stay until the end. Because one idea here could change how you think, and how you trade. Let's go. But the unvarnished truth is both simpler and far more brutal. The chasm between your effort and your results exists not because your strategy is flawed, but because your mindset has failed to evolve in parallel. Trading, in its ultimate analysis, is not merely a profession of skill and analysis, it is a crucible of personal transformation. The individual who begins this arduous journey, with their untested hopes and unmanaged fears, is constitutionally incapable of becoming the successful trader they aspire to be. They must be forged anew in the fires of volatility and uncertainty. Yet, the overwhelming majority of market participants focus with laser intensity on the external mechanics, the perfect chart pattern, the infallible indicator, the precise entry and exit. They obsess over the map while completely neglecting the navigator. The internal landscape, the cultivated patience of a monk, the emotional discipline of a surgeon, the unflinching self-awareness of a philosopher, this is the true, unbridgeable divide. This is the schism that separates those who evolve from those who remain eternally stuck. Let us be brutally honest with ourselves. Most traders do not meet their demise because they are ignorant of what to do. They perish because they are incapable of executing what they know. You possess the intellectual understanding that revenge trading is financial suicide, yet you find your finger clicking the buy button in a feverish attempt to reclaim lost dignity. You know, with absolute certainty, that moving a stop-loss is a betrayal of your own plan, yet you concoct a sophisticated narrative for why this particular instance is the exception. You know you should adhere to your meticulously crafted plan, yet you stand by, a passive observer, as a tidal wave of emotion overwhelms the fortress of your logic. This fissure, this Grand Canyon-sized gap between cognitive knowledge and behavioral execution, is where 95% of trading careers are interred. The cause of death is not a lack of intelligence, but a profound deficit in mental conditioning. You see, the act of trading systematically rewires the very neural pathways that govern your reaction to uncertainty. And for the human animal, this is an inherently uncomfortable, even threatening, process. The human brain is a magnificent instrument, but it was engineered by evolution for survival on the savannah, not for speculation in the digital marketplace. It craves safety, demands certainty, and seeks immediate gratification. The financial markets, by their very nature, offer the exact antithesis, a perpetual state of unpredictability, violent volatility, and rewards that are dispensed only to those who exercise preternatural patience. Consequently, when you engage the markets, you are not merely executing trades, you are engaging in a primal battle against your own biology. You labor under the illusion that you are competing against other traders or deciphering an enigmatic market, but the true adversary is the ghost in the machine, your own ingrained instinct. Every time you chase a setup already in motion, every time you hesitate on a valid signal, every time you rationalize a breach of your own rules, you are not being outsmarted by the market. You are being hijacked by your own limbic system. This is the foundational reason why countless traders spend years, even decades, in a perpetual cycle of refining their strategies, backtesting new systems, and searching for the Holy Grail, while their internal state remains frozen in time, governed by the same reactive impulses. They change the software, but the operating system, the core psychology, remains corrupted by fear and greed. And so, predictably, nothing of substance changes. Here is the painful, liberating truth you must confront: your lack of consistency is not a strategic deficiency, it is a crisis of self-mastery. From the very beginning, you were indoctrinated with the belief that success is synonymous with discovering the perfect setup. But the professional, the one who endures, understands a deeper secret: success is the organic result of becoming the right person. It is about forging a mental resilience so robust that you can execute your statistical edge over hundreds, even thousands, of trades, even when the short-term outcomes deliver psychic pain. It is about achieving a state of emotional independence where your sense of well-being is not held hostage by the market's daily verdict. Until you master this profound detachment, no quantity of technical analysis, no matter how sophisticated, can provide salvation. Reflect for a moment on your own experience. How many instances can you recall of a perfectly valid, rules-compliant setup that you failed to act upon, paralyzed by the fear of being wrong? How many times have you prematurely exited a winning trade, seized by an anxiety that the paper profits would evaporate? How often have you inflated your position size, intoxicated by the siren song of greed? In every single one of these scenarios, you were not reacting to price action, you were reacting to the internal storm of your own emotions. And emotions, when left unchecked, become a destructive force that introduces chaos into the sacred space of decision-making. Let us delve deeper into the psychology of losing. When you incur a loss, your brain does not simply register a negative number on a screen. It processes the event as a personal failure, a public indictment of your competence. This triggers a cascade of primitive emotions: shame, doubt, and visceral anger. These feelings, in turn, create an overwhelming compulsion to fix the feeling, not to rectify the process. So, you lunge into another trade, impulsively and emotionally, not as a calculated business decision, but as a form of psychological triage, a desperate attempt to cauterize the wound to your ego. This is the genesis of revenge trading. And because this new position was born from emotional desperation rather than logical deliberation, it carries a high probability of failure, thus reinforcing the cycle of pain and perpetuating the downward spiral. Now, observe the mirror image, the psychology of winning. You secure a significant profit. A surge of euphoria courses through you, you feel invincible, omniscient. Your brain is flooded with dopamine, the very same neurotransmitter associated with the high of a gambling win. In this chemically altered state, you become convinced you have deciphered the market's secret code. This false enlightenment leads to catastrophic overconfidence. You recklessly increase your lot size, you assume risks that violate your model, and you abandon the very plan that generated the win in the first place. But the markets are a predatory ecosystem designed to exploit such emotional extremes. The subsequent trade inevitably reverses, clawing back your hard-won gains, and plunging you into a state of bewildered frustration. This, in turn, triggers overtrading, and you find yourself back at the starting line, your account and your spirit diminished. This is not a story of bad luck, it is a clinical case study in poor emotional conditioning. Until you learn to regulate these primal responses, the market will forever hold the leash, and you will remain the dog being walked. Before we proceed further into this labyrinth, I must pose a direct and uncomfortable question. Are you, in this moment, struggling with the specter of fear, the paralysis of doubt, or the compulsive cycle of overtrading? The empirical truth is that most trading careers are not terminated by inferior strategies, they are euthanized by toxic psychology. It was to address this very core issue that I authored my comprehensive ebook, Master Your Mind, Master Your Trades. Within its pages, you will find a structured system of practical, actionable steps designed to help you seize control of your emotions, cultivate unshakable discipline, and ultimately, trade with the poised precision of a professional. If you are truly ready to transcend your current plateau and ascend to the next level of performance, the resource you require is available. You will find the link in the description below and the pinned comment. Secure your copy and begin the real work today. Now, let us continue our excavation. The unprofitable trader is trapped in a self-created purgatory, condemned to repeat the same emotional patterns in perpetuity because they have never paused the frantic chase long enough to conduct a forensic audit of their own mind. They perpetually seek the next holy grail strategy, a new external savior, instead of courageously confronting the real enemy, their own demonstrated inability to execute a single edge with consistency. They proclaim, "This new system will fix everything," when in reality, it merely serves as a temporary anesthetic, masking the festering wound of indiscipline. You cannot construct a skyscraper of consistency upon a foundation of emotional quicksand. The inaugural, non-negotiable step on the path to profitability is radical self-honesty. You must, with brutal and unforgiving clarity, admit to yourself that the majority of your trading troubles are not inflicted by the market, they are self-inflicted wounds. The market did not hold a gun to your head and force you to overtrade. The market did not possess a remote control to move your stop-loss. The market did not compel you to risk 10% of your capital on a single, reckless gamble. You did. You alone pressed the button. The moment you fully accept and internalize this uncomfortable ownership of your actions, you initiate the process of reclaiming your power. For as long as you outsource blame to the nebulous market, you voluntarily surrender your agency and remain a victim of circumstance. Let us venture even deeper into the psyche. A significant portion of traders are, perhaps unknowingly, addicted to uncertainty. They profess to despise losing, but on a subconscious level, they are hooked on the emotional roller coaster, the adrenal rush of the chase, the dopamine hit of a moving candle. They become connoisseurs of their own anxiety, mistaking the intense stimulation of the process for genuine progress. This is why they are incapable of stepping away from the screen, or why they enter trades that blatantly violate their plan. Their primary motivation has shifted, they are no longer trading to generate profit, they are trading to feel alive. They are using the market as a pharmacological instrument to alter their emotional state. The consistent trader, by stark contrast, has undergone a profound emotional detoxification. They have surgically broken the addiction to excitement and replaced it with a reverence for discipline. They have come to understand a counterintuitive truth: boredom is a hallmark of profitability. When the market presents no high-probability opportunities, their most skilled action is deliberate inaction. This is the fundamental schism between a trader who is a slave to dopamine and a trader who is a master of consistency. Another insidious, hidden reason for your lack of profitability is a persistent short-term orientation. You are obsessed with doubling your account in a single month, a get-rich-quick fantasy, rather than architecting a plan for sustainable, compounded growth over a year or a decade. You chronically underestimate the majestic, relentless power of compounding and grotesquely overestimate the role of transient luck. Authentic professionals think in the language of probabilities and longevity, not in the fleeting euphoria of daily wins. They comprehend that the game is not about being proven right on any given day, it is about ensuring that your statistical edge is expressed and rewarded over a sample size of hundreds or thousands of trades. You see, when you cease thinking in the binary terms of winning and losing, and instead orient your entire being around the sacred act of flawless execution, a metaphysical shift occurs. You begin to value process with a religious fervor, relegating results to a mere secondary byproduct. You stop measuring your self-worth by the color of your daily P&L and start calibrating it against the unwavering fidelity you showed to your trading rules. This profound mindset shift is the alchemical process that transmutes the base metal of random gambling into the gold of professional trading. Let us now confront the powerful concept of identity. If, in the deepest recesses of your psyche, you still harbor a self-image of being an inconsistent, struggling trader, your external results will inevitably conform to this internal blueprint. The market is a perfect mirror, it reflects your self-concept back at you with terrifying accuracy. Therefore, even if you experience a fortunate streak of winning trades, your subconscious mind will, with ingenious subtlety, orchestrate a series of self-sabotaging acts to return you to the familiar territory of inconsistency, your psychological comfort zone. Until your core identity is realigned with that of a disciplined, professional trader, the very feeling of consistency will seem alien and unattainable. This is why profitable traders do not merely modify their habits, they undergo a complete identity metamorphosis. They cease the weak language of, "I'm trying to be consistent," and instead adopt the empowered declaration of, "I am a disciplined trader." This may appear to be a minor semantic distinction, but on a psychological level, it is a seismic event. Your behaviors are not dictated by your intentions, they are dictated by your identity. The conclusion is inescapable: you do not need a new strategy. You require a new self-concept. Here is another painful truth to digest: you are not profitable because you remain emotionally entangled with the money itself. You are risking capital that you cannot emotionally afford to lose. When you stake your rent money, your ego, or your sense of self-esteem on a single trade, every microscopic tick of the price becomes a personal affirmation or insult. This immense emotional pressure systematically annihilates your objectivity. Professional traders do not trade money, they trade percentages, probabilities, and predefined setups. The monetary gain or loss is merely a logistical outcome, a byproduct of a correctly executed process. Until you achieve this emotional detachment from your trading capital, you will forever be a hostage to irrational decision-making. You will close winning positions prematurely. You will commit the cardinal sin of moving stop losses. You will panic. The objective is not to become an ascetic who is indifferent to money, but to reach a state where money ceases to be the puppet master pulling the strings of your judgment. This is why elite traders always, without exception, risk a small, psychologically insignificant fraction of their capital. They understand that emotional comfort is a more valuable asset than rapid growth, because a calm mind is a clear mind, and a clear mind is the exclusive generator of consistent results. You must also internalize the paradoxical truth that genuine consistency is born from the womb of boredom, not from the thrill of excitement. Authentic, professional trading is profoundly repetitive. You identify the same high-probability setups, you adhere to the same immutable rules, you manage your risk with the same mechanical precision, day after day, week after week. There is no adrenaline rush, no intoxicating thrill, only the quiet hum of unwavering discipline. If your trading experience still feels like a visit to a casino, that is a diagnostic signal that you are not operating within a structured, rule-based framework. And perhaps, this very lack of structure is the anchor that holds you fast to the seabed of unprofitability. You are still trading for neurological stimulation instead of for systematic execution. The profitable trader has achieved a state of non-attachment to outcomes. They do not engage in celebratory rituals for small wins, nor do they descend into mourning over small losses. They simply execute their process with the detached focus of a master craftsman. This is why their equity curve exhibits stability, not the explosive, volatile spikes of a gambler, but the smooth, exponential ascent of a business owner. The ultimate, culminating truth regarding your lack of profitability is this: you have not yet fully accepted the true cost of consistency. The price of admission is boredom, patience, and emotional humility. It demands the admission that the market is a vast, impersonal force that is utterly indifferent to your existence, your desires, and your survival. It means surrendering the illusion of control and placing your faith in your statistical edge. It means trading without the neurotic need for external validation or self-affirmation. Most traders profess a desire for the freedom that trading promises, but they recoil from the exacting discipline required to purchase that freedom. They crave profits without the prerequisite of emotional and psychological growth. But the market is a merciless meritocracy, it does not reward desire. It rewards discipline. You will cease to be inconsistent the very moment you stop chasing the phantom of market control and begin the earnest, lifelong work of mastering yourself. Because every failed setup, every depleted account, every moment of seething frustration is, in its essence, the market holding up a mirror, showing you with brutal clarity the internal flaws that still require your attention. Profitability is not a secret hidden within. The charts. It is a potentiality dormant within your own mind. And the moment this realization shifts from an intellectual concept to a lived, embodied truth, your entire trading universe will begin to transform. If you have ever found yourself bewildered, asking why you persistently repeat the same errors, violate your own rules, and take trades you had sworn to avoid, understand this: it is not a symptom of personal weakness. It is evidence that your trading behavior is being piloted by subconscious habits of which you are largely unaware. The reality is that most traders are imprisoned in a cyclical loop controlled not by logic, but by deep-seated psychological patterns operating beneath the level of conscious thought. Consider this familiar scenario. You sit down before the market opens, fortified with resolve, and declare to yourself, "Today, I will be disciplined." You meticulously review your plan, you affirm your commitment to risk management, and you vow to wait with the patience of a saint for your perfect setup. But then, the market begins to move with velocity, and in a fleeting moment of weakness, you enter prematurely, you adjust your stop-loss against your better judgment, and you risk an amount that dwarfs your predefined limit. You watch, helpless, as price drifts towards your stop-loss and triggers it. A wave of guilt and self-recrimination washes over you. You vow, with renewed intensity, never again. Yet, the very next day, the script repeats itself with haunting familiarity. This is not a knowledge deficit, this is conditioning. You have, through repetition, trained your brain to associate emotional relief with the act of impulsive trading. When anxiety grips you, you click the buy or sell button, not because a valid setup exists, but because the act itself provides a temporary sedation for your nerves. When frustration mounts, you engage in revenge trading not as a wealth-building strategy, but as a pathological mechanism to regain a sense of agency and control. Your mind has formed a powerful neural link: impulsive action equals temporary emotional relief. Therefore, every emotional trigger becomes a siren song luring you towards the rocks of self-sabotage. This is the first invisible habit: emotional repetition. You do not repeat mistakes because you lack willpower, you repeat them because they have become your emotional comfort zone, your default state of being. To shatter this cycle, you must engage in the deliberate retraining of your brain's pleasure-pain associations. Presently, your neurology is wired to perceive the adrenaline rush of entering a trade as pleasure, and the patient, disciplined act of waiting as pain. This wiring is fundamentally inverted. Professional traders have successfully rewired this circuitry. They have taught their brains to derive satisfaction, to feel a sense of rightness and pleasure, from waiting, from discipline, from adhering to their plan. This is not about fleeting motivation, it is about permanent, hardwired conditioning. This is the essence of trading psychology. It is not a discipline of inspirational quotes and positive thinking, it is a science of rewiring subconscious responses. You cannot defeat deeply ingrained emotions with sheer force of will. You must systematically teach your mind what to associate with pleasure and what to associate with pain. When you begin to consciously celebrate acts of discipline and feel discomfort with acts of impulsivity, that is the precise moment your trading destiny begins to change. Let us excavate another hidden habit: the addiction to outcome. Most traders are not merely executing a system, they are trading to prove something, to themselves, to a skeptical spouse, to the world. This is why every loss is metabolized as a personal failure. You take a loss and the immediate, internal narrative is, "I am a failure. I am not good enough." Conversely, a winning trade transmutes into a validation of your intelligence and worth. This emotional dependency on PNL for self-esteem systematically eviscerates objectivity. You cease chasing probabilities and begin chasing validation. Ponder this: after a day of losses, do you feel a calm acceptance, or are you immediately consumed by scheming how to win it all back tomorrow? That compulsive urge to immediately repair the loss is a telltale symptom. You are not trading to execute an edge, you are trading to fix a feeling. And until you perform a surgical separation of your self-worth from your trading results, you will remain perpetually stuck. Consistent traders have achieved this separation. They do not perceive individual trades as personal victories or defeats. They see them as discrete data points, individual soldiers in a vast army, each contributing to a larger statistical outcome. A single trade does not define them. They understand, at a bone-deep level, that they can lose 5, 10, or even 20 trades in a row and still conclude the month profitably, provided they honored their edge on every single execution. This detachment does not stem from arrogance, it is the offspring of experience and ingrained discipline. To ascend to this level, you must perform a fundamental redefinition of success. Success is not a green day on your platform. Success is a day where you executed your trading plan with perfection and precision, even if the final outcome was a loss. Because when you judge your performance by the quality of your process, rather than the randomness of your profit, you initiate the construction of habits that are durable, resilient, and ultimately, profitable. Here is a neurological reality most traders never grasp: your brain rewards repetition, not logic. It is an organ of habit, indifferent to whether a repeated behavior is beneficial or destructive. It only recognizes what is familiar. This is the engine behind your relapse into destructive trading behaviors. You have repeated them so frequently that your brain has cataloged them as normal. It is the identical mechanism that binds individuals to toxic relationships or debilitating life routines. Familiarity, even when painful, feels safer than the uncertainty of change. To break this feedback loop, you must make the state of discipline more familiar to your brain than the state of chaos. This requires the intentional, daily cultivation of small, consistent routines that actively reinforce a sense of control. For instance, instituting a mandatory ritual of pausing and taking 3 deep, conscious breaths before entering any trade. This may seem trivial, but this simple act serves as a circuit breaker, disrupting the momentum of emotional urgency. Over time, through relentless repetition, your brain will learn to associate the act of trading with a state of calm focus instead of frantic reaction. Now, let us examine one of the most pernicious and dangerous hidden habits in trading: the need to predict. You are likely oblivious to the profundity of this instinct. Every time your eyes meet a price chart, your mind, driven by a deep-seated aversion to ambiguity, immediately launches into a forecasting mode, attempting to divine the future direction of price. This compulsion is a direct manifestation of the brain's primordial need for certainty. The catastrophic problem is that financial markets do not operate on the axis of certainty, they operate on the axis of probability. Consequently, when the market moves contrary to your prediction, your brain does not simply register a statistical outcome, it interprets the event as a personal attack, a violation of its worldview. It panics, it takes the movement personally, and it launches a counterattack in the form of forced, emotionally charged trades. You are no longer responding to logic, you are reacting to violated expectations. This is the precise mechanism that causes even seasoned, knowledgeable traders to lose their composure when price action deviates from their script. Here is the difficult truth: the more intellectual and emotional energy you invest in prediction, the more entangled you become with the outcome. And the more entangled you are, the more your objectivity evaporates. The most masterful traders do not waste their energy on prediction. They dedicate their resources to preparation. They have made peace with uncertainty, accepting it as an intrinsic, non-negotiable characteristic of the profession. They do not require the illusion of knowing what will happen next, because they possess the unshakable confidence of knowing exactly what they will do, no matter what happens. This is the hallmark of true mastery. Another invisible habit that maintains the prison walls for traders is identity conflict. At a subconscious level, many individuals, despite years of screen time, still fundamentally identify as beginners, as strugglers, or as imposters. Therefore, when they begin to experience a streak of success, their subconscious mind, which is wired to maintain a consistent self-concept, will orchestrate subtle acts of sabotage to return them to their familiar identity. This is not a conscious, malicious act, it is a psychological immune system rejecting a foreign identity. The subconscious is a powerful gravitational force, always pulling you back to the orbit of what feels most familiar. If your internal self-image is not that of a consistent, calm, and capable professional, your external results will inevitably conform to this lesser image. This is why it is imperative to actively reconstruct your trading identity. Begin the practice of mental rehearsal. Vividly visualize yourself as the trader who follows rules effortlessly, who remains unflappable during drawdowns, who executes with calm, machine-like precision. The human brain possesses a remarkable neuroplasticity. It struggles to differentiate between vividly imagined experience and physical reality. It will gravitate towards the internal images you consistently feed it. When you mentally rehearse states of discipline and control, you are laying down neural pathways that make the actual enactment of those states significantly more accessible in real time. Here is a paradigm-shifting concept few traders ever consider. Your trading screen is not a battlefield, it is a mirror. It does not show you objective reality, it reflects your internal emotional and psychological state back at you. If you are gripped by anxiety, you will perceive chaos and danger in the most mundane of price oscillations. If you are centered and calm, you will perceive structure and opportunity within the very same chart. The market's canvas is static, the lens through which you view it is colored by your mindset. This is the secret reason why working on your psychology has a direct, measurable impact on your trading accuracy. The unprofitable trader reacts to the chart. The consistent trader responds to it. There is a universe of difference between these two. Reacting is emotional, fast, impulsive, and instinctive. It is a limbic system hijacking. Responding is deliberate, slow, calculated, and intentional. It is an act of the prefrontal cortex. Every single time you institute a conscious pause between seeing a potential setup and clicking the execution button, you are taking a definitive step towards mastery. Another hidden psychological trap is the obsession with making it back. Every trader has navigated this treacherous terrain. You absorb a significant loss, and your mind instantly becomes consumed with a singular, compulsive focus: recovery. You are no longer thinking about the next high-probability setup, you are strategizing how to reclaim what was taken from you. But this desperate need to recover is merely the ego, masquerading as a logical imperative. The market is a realm without memory, it does not owe you a single penny. Every trade is an independent event, statistically uncorrelated to the one that preceded it. When you approach a new trade while emotionally chained to your past results, you are not trading the objective reality of the chart in front of you, you are trading your unhealed pain. You are attempting to settle an old score. Professional traders possess the wisdom to recognize this state within themselves. They know, with chilling clarity, when their emotions have begun to cloud their judgment. They possess the strength to walk away, to shut down the platform. This act is not born from fear, it is the ultimate expression of discipline. They protect their mental capital, their clarity, their objectivity, their emotional equilibrium, with the same ferocity with which they protect their financial capital. This vigilant stewardship of the mind is the critical differentiator between the traders who survive for the long term and those who inevitably succumb to burnout. Let us discuss the nature of comfort zones. The majority of trading losses are not precipitated by poor technical analysis. They are the consequence of a trader's refusal to step outside their emotional comfort zone. They take trades that feel comfortable and familiar, rather than trades that are objectively sound according to their system. They remain in losing positions far beyond their logical stop-loss because the act of closing the trade and realizing the loss is more emotionally painful than the prospect of further financial loss. They avoid scaling into winning positions or taking on appropriate size because the associated risk feels uncomfortable. A fundamental law of growth states that it only occurs outside the boundaries of comfort. The market is a relentless personal trainer, constantly testing your threshold for emotional and psychological discomfort. Your capacity to endure this discomfort without compromising your discipline is, in fact, your most significant edge. If you can remain a pillar of calm while the market induces panic in others, if you can exercise supreme patience while others are gripped by FOMO, fear of missing out, if you can maintain objective clarity while others are drowning in reactive emotion, you will, by default, ascend above the losing majority. Another invisible pattern of failure is overexposure to information. The modern trader exists in an era of informational deluge, a cacophony of social media signals, a dizzying array of technical indicators, and a 24/7 news cycle. The paradoxical result of consuming this fire hose of data is a progressive erosion of self-trust. Analysis paralysis sets in. You begin to second-guess every potential move because your brain is saturated with conflicting, contradictory noise. The consistent trader operates on an opposing principle: radical simplification. They are ruthless in their elimination of any data point, indicator, or source of information that does not directly serve their core trading system. They focus with monastic devotion on one or two high-probability setups, one or two currency pairs or instruments, and they strive to master them at a profound level. Simplicity is tragically underrated in the trading community precisely because it is not glamorous or exciting. But it is simplicity, born of deep focus, that forms the bedrock of unwavering consistency. One of the most challenging cultural beliefs to unlearn is the axiom that more effort equals better results. In the domain of trading, this is a dangerous fallacy. The market is not an employer that pays you for hours worked. It is a probabilistic environment that rewards patience and discipline. You can martyr yourself before the screens for 12 hours a day, consuming every piece of information, and still incur losses if your underlying mindset is volatile and unstable. Conversely, you can trade for only 2 focused hours a day and achieve profitability if your mind is calm, selective, and utterly disciplined. In the markets, the quality of your engagement perpetually trumps the quantity of your screen time. Here is a crucial reframing to adopt: every losing streak, every setback, every depleted account is not merely a failure, it is a dataset. It is a collection of invaluable data points about your psychological habits and emotional triggers. The majority of traders ignore this data because confronting it is an uncomfortable, even painful, exercise in self-examination. But if you have the courage to look deeper, every single mistake serves as a diagnostic tool, pointing directly to an underlying emotional pattern. Perhaps you have a pathological inability to hold on to winning positions. Perhaps you possess a compulsion to double down after a loss, trying to average down. Perhaps you cannot sit through a routine drawdown without experiencing a panic attack. Each one of these behaviors illuminates the precise area where your personal growth is most urgently required. When you begin to treat your losses not as failures, but as feedback from the market about your own psyche, you will enter an accelerated phase of development. This is the professional mindset. Professionals do not experience losing, they engage in data collection. Every single trade, regardless of outcome, teaches them something invaluable about the behavior of the market or, more importantly, about the landscape of their own inner world. It is this mindset, this relentless curiosity and absence of judgment, that builds longevity and sustainable success. At the end of the day, the grand endeavor of trading is not about mastering the external market. It is about the infinitely more challenging task of mastering yourself. Every chart pattern, every indicator, is ultimately just a Rorschach test, a mirror reflecting the contours of your own emotional state. The market, in its infinite wisdom, rewards self-awareness and punishes ego. It humbles the arrogant and enriches the humble. You will finally shatter the cycle of inconsistency the day you cease your futile quest for control over the market's movements and begin your sacred quest for control over your own internal universe. Because once you successfully alter your internal patterns, your habits, your emotional triggers, your core mindset, your external results will transform as a natural, inevitable consequence. Not because the market has changed its nature, but because you have changed yours. There is a moment in every trader's journey when the weight of frustration becomes an unbearable burden. When the sheer volume of effort expended stands in stark, mocking contrast to the elusiveness of consistent results. You tell yourself you are learning, you are improving, but the cold, hard data of your account statement tells a different, more disheartening story. You study with increased fervor, you analyze with greater complexity, you consume a limitless stream of educational content, and yet you remain trapped in the same Sisyphean cycle of gains and losses that perpetually cancel each other out, leaving you at a net zero. The fundamental truth you must accept is that you are not struggling due to a deficit of knowledge. You are struggling because your mind, your operating system, remains conditioned to function like that of a gambler, not a strategist. Every losing streak, every emotionally driven decision, every lapse in patience is not proof of a flawed strategy, but proof that trading success is not an informational challenge, it is a transformational one. You do not graduate to profitability by learning more. You ascend by changing the very fabric of how you think, how you feel, and how you react under the intense pressure of real-time risk. The market is a dispassionate, unfeeling entity. It is utterly indifferent to your effort, your desires, or how desperately you want to succeed. It functions as a perfect mirror, reflecting only your discipline. When you lose control internally, when fear, greed, or impatience seize the helm, this internal chaos manifests externally in the form of poor trades. Most traders claim to be patient, but in reality, their patience is merely a state of anxious waiting, a coiled spring tension, hunting for any pretext to enter the fray. They believe they are observing the market, but their minds are in a state of predatory alertness. Every minor fluctuation in price, every candle that moves a few pips, triggers a deep-seated fear of missing out, FOMO, the illusion that a monumental opportunity is slipping through their fingers. This is the genesis of emotional trading, the critical juncture where logic is deposed and hope is instated as the ruler of your decisions. The most painful aspect of this dynamic is that you are often completely unaware of the hijacking until you are already a prisoner within the trade. Your own brain, in its quest to resolve the acute anxiety of waiting, will conspire to rationalize an invalid setup, presenting it to your consciousness as a logical opportunity. This is why impatience so often masquerades as a sense of urgency. It deceives you into believing that immediate action is the most rational course, when in reality, it is a purely emotional compulsion. You have undoubtedly lived this experience. You witness a rapid price movement, and a physiological response is triggered, your chest constricts, your heart rate accelerates, and an internal voice begins to scream, "Go, go, go." You enter the market without the requisite confirmation, all the while assuring yourself that you can manage the trade if it turns against you. Then, the inevitable reversal occurs, and you are left with the bitter taste of foolishness. The financial loss is secondary, the primary injury is the profound self-betrayal, the knowing that you possessed the knowledge to act correctly, but were overruled by a more primal force. This is the psychological trap that holds the vast majority of traders in perpetual captivity. It is not a problem of knowledge, it is a crisis of impulse control. Trading, more than any other profession, forces you into a direct, unmediated confrontation with your own emotional architecture. Every click of the execution button is an act of self-revelation, exposing your deepest fears, your latent greed, and your capacity for patience. There is no place to hide from yourself in the markets. If you possess an unquenchable thirst for instant gratification, the market will reveal it. If you are haunted by a fear of missing out, the market will amplify it. If you harbor a secret intolerance for waiting, the market will punish it. Every habitual thought pattern, every subconscious belief, will eventually find its precise expression in the trajectory of your equity curve. This is why trading is so often described not as a window to price action, but as a mirror to the human soul.